We're watching every move the market makes. This is Australia's Business Channel. This is the Sky News Business Channel.
Hello, good morning and a warm welcome. You're with First Business. It is June the 25th, Friday morning, and it's great to have your company. Top stories: a soggy start. The local market will likely follow Wall Street's losses thanks to news on the economy and weakness in the banks. Down to business, Julia Gillard starts mending fences both inside and outside the world of politics. Resource respite, the new PM stance on the RSPT wins over some cautious fans in the mining sector. In case closed, the NAB's US class action gets thrown out in now the country's highest court. There weren't any highs touched on Wall Street overnight, indeed plumbing new lows with the big board still above 10,000 there, but it was a triple-digit decline, 1.4% weaker. Tech-weighted NASDAQ in percentage terms the worst performer, off 1.7%. We're getting some numbers after the bell from Research in Motion. Check in on those, maker of the BlackBerry, shortly with Stephen Chalmers from the NASDAQ site. The broader 500 and the NASDAQ, though, both off about 1.6% and change. I want to bring in my special guest host this hour, Simon Mariner from Aliom. It's interesting now, the S&P, Simon, capping its longest decline in 7 weeks. A lot of people saying everything heads back to jobs now. Even a dire housing market, you've got to kind of look what underpins that. Are you seeing any traction in the jobs market?
Yeah, not seeing that traction yet, and certainly the housing market reflecting that sign, as we've spoken about time and time again. It's rare that people go out and spend money on houses if their job prospects or employment prospects are uncertain. Certainly the market's coming off again. Been looking at that 200 period moving average quite closely. We all got very excited when we saw that S&P close above. Certainly now closed below a couple of times as well, so a little bit of risk aversion creeping into the markets there. Certainly even ignoring that good unemployment data potentially that we saw overnight also.
Yeah, speaking of levels, people are saying on the 500 that if we go down 3.8% from recent closes, we'll be in this head and shoulders pattern. For the uninitiated, what is that signalling? What is the street saying? Yeah,
further downside there. I think, you can't really talk about a bullish market until, you sort of take the top of the high and the top of the lows and get about a halfway mark in between and have a sustained market above that. And sustained means not just days, but, just a couple of weeks.
Because essentially to get that head and shoulders, 1, 2, 3, you've got what? 3 successive rallies that are judged to be unsustainable.
Yeah, and unsuccessful, yeah.
So further shifts to the downside, so that could be a bit of a red flag on the markets of late. Tell me as well, now let's bring in, and we'll get more comment from you, of course, Stephen Chalmers, those at the Market Intelligence Desk.
Stephen, we've just been discussing the housing market. Simon Mariner here, and the unemployment sort of figures are underpinning that. But it's quite baffling and intriguing to me. You've got median house prices across Australia, America, or US, or rather about 200,000, and the average household income 50,000. So just on 4 times, which is cheap enough to make most sort of Sydney-siders cry. Why aren't they buying houses when there's relatively good buying at those levels?
I think it's a lot of sentiment too. People aren't ready to come to grips with the fact that the houses they live in aren't worth what they think they're worth. So they're not willing to put those on the market. And just like there's not a lot of turnover, we saw the sales data very disappointing. We saw an all-time low yesterday. So I think people aren't really realizing the value in their house, willing to come to that realization. So we're not seeing people move, we're not seeing any turnover, and we're not seeing any real housing market. I don't know if prices have to come in for that to happen, but there's certainly some concern.
Quite hopeful, I'm afraid.
Even seems austerity seems to be the answer at the moment. We heard from your US Treasury Secretary, though, warning of potentially some of the dangers of attacking those deficits a little bit too hard. Perhaps your comments on that also in light of the fact I think that we're getting wind that about 50% of that TARP has already been reclaimed back now.
Yeah, Simon, it's a good question, and particularly, it references back to your early question with Stephen about why is it that if median home prices are $200,000 and median incomes are $50,000, why aren't we seeing more traction in the housing market? And it all comes back to the sort of indebtedness level of the U.S. consumer. And unfortunately, the government, particularly the U.S. government, has taken its cue from this consumptive-based economy that has grown out of North America in the last 20 years and has really sort of run its course and simply run out of fuel.
Let's get more on that story with my guest host this hour, Simon Mariner from Aliom. Simon, interesting when you look at Julia Gillard's remarks just yesterday, almost this acceptance speech, talking about really Australians are entitled, she said, to a fairer share of our inheritance, the mineral wealth that lies in our grounds. That didn't seem to me that there was any sign of a U-turn.
Look, certainly the RSPT has changed the risk parameters revolving around what's been seen as Australia's almost golden goose of a mining sector, both for dual listed stocks and for those solely listed on the ASX. It's going to impact obviously foreign investors' view of Australia as a low risk, a competitive global supplier of commodities, and the $300 billion worth of projects that were queued up was certainly inspiring a lot of confidence in the Australian economy, and making it a very attractive place potentially to lend into, despite the fact that we've got debt levels both public, private and corporate, the same as.
Though the